What if I told you we're all living inside a K-shaped economy, where one half of society is climbing higher each year, while the other is quietly sinking? Not a circle. Not a V-shaped rebound. A K, one line up, one line down. Same country. Same system. Yet two completely opposite realities. And the scary part. This divide isn't just about who earns more money anymore. It's about who gets access to technology, education, healthcare, housing, and even retirement. It's about who controls time. And who's trapped by it. So over the next 20 minutes, let's slow this down and unpack what a K-shaped economy really is, how we got here, who's rising, who's falling, and, most importantly, what it takes to climb upward yourself. The phrase K-shaped recovery went viral after COVID-19 hit in 2020. When the economy shut down, everyone braced for a collapse. Then, miraculously, the markets rebounded. But not everyone rebounded with them. Tech workers, software engineers, investors, their wealth skyrocketed. Their Zoom jobs survived, their portfolios exploded. Meanwhile, restaurant servers, store clerks, rideshare drivers, they fell through the cracks. Economists looked at the data and said, this isn't a V-shaped recovery. It's a K. The top half of the K went up, people with digital skills, assets, and remote jobs. The bottom half went down, people tied to physical labor and hourly pay. But here's the truth, this wasn't new. COVID didn't create the K-shape. It simply made it visible, overnight. Let's rewind to the 1980s. Back then, productivity and wages moved together. When workers produced more, they earned more. But starting in the late 80s and early 90s, those lines split. Globalization shipped jobs overseas. Automation replaced factory lines. And a new kind of capitalism took root, one that rewarded shareholders far more than workers. Since then, US productivity has risen over 60%, but median wages barely 15%. That difference didn't vanish, it was captured as profit, dividends, and stock buybacks. By 2019, before a single lockdown, the top 10% owned nearly 70% of America's wealth. Then the stimulus era began. Zero interest rates. Free money. Asset inflation. Stocks, crypto, and real estate soared, and the rich got richer than ever. Picture someone at the top of the K. Maybe a remote software engineer in Austin. A portfolio manager in Boston. Or even a content creator making six figures from their phone. They earn from assets, not just hours. Their income compounds, because it's tied to equity, to code, to capital. When the Fed cuts rates, their mortgage gets cheaper and their stocks rise. When AI tools appear, they become multipliers, not threats. They use time as leverage, automating, investing, delegating. They're not living paycheck to paycheck, they're living algorithm to algorithm, compounding every click, every share, every trade. This is the new elite, not always born rich, but positioned correctly. Now shift to the bottom half. A single mom working retail. A delivery driver logging 12-hour days. A restaurant worker whose hours were cut after lockdowns. Their income is linear. If they don't show up, they don't earn. No stock options. No dividends. No passive income. Inflation hits them first and hardest: gas, groceries, rent. Meanwhile, politicians brag about record GDP. But GDP growth means nothing if your paycheck hasn't grown in 10 years. This is why people feel angry, confused, and disillusioned. They're told the economy is strong, yet they're falling behind every month. 2 Americas. 1 invisible wall. After 2020, central banks flooded the system with cash. It saved the markets, but widened the divide. Here's what happened: trillions in liquidity pushed up asset prices, stocks, homes, collectibles, even Pokemon cards. But wages barely moved. If you already owned assets, your wealth exploded. If you didn't, inflation devoured your savings. Between 2020 and 2022, the top 1% gained over $10 trillion in net worth. The bottom 50%. Practically nothing. That's how a rising market can still leave half the country behind. Money doesn't trickle down anymore, it trickles up. Technology is no longer neutral, it's a force that magnifies inequality. AI is the perfect example. If you're a data analyst, a marketer, or a writer, AI becomes your co-pilot. If you're a call center agent or a truck driver, AI becomes your replacement. Platforms like YouTube, TikTok, and X gave rise to a new class of digital entrepreneurs. People who understand attention are monetizing faster than ever. But millions of others scroll those same platforms, consuming, not creating. The algorithm favors the few who understand it. That's why the K-shape now runs through the internet itself, the algorithmic economy. For decades, education was the great equalizer. Today, it's the great divider. College graduates earn 84% more than non-grads, but the average degree costs 4 times more than in 1990. So the wealthy can buy the very credential that keeps them wealthy. Meanwhile, trades, electricians, plumbers, HVAC technicians, struggle with stigma, even though many now out-earn white-collar workers drowning in student debt. It's a paradox: knowledge compounds, but access to knowledge doesn't. The higher education system became another business model, not a ladder. And so, education, once a bridge, became part of the K. Beyond numbers, the K economy rewires how people think. One side plans for retirement, the other prays for next Friday. One side buys dips, the other buys groceries. One side thinks in decades, the other, in days. This difference in time horizon is the real wealth gap. If you can delay gratification, invest long-term, and think strategically, you participate in wealth creation. If you can't, because survival demands your attention, you're forced into short-term decisions that the system profits from. That's the trap. Impatience feeds the bottom of the K. Patience feeds the top. So the question is, how do you climb the K? Start by leveraging what the system rewards: skills that scale, assets that appreciate, time that compounds. Leverage doesn't just mean money, it means leverage of effort. Code, content, capital, community, anything that earns while you sleep. If you don't own an asset, become one. Build your brand, your IP, your platform. Learn how money moves. Understand policy, markets, and technology. Because once you see the system, you stop being controlled by it. This isn't a moral divide, it's a structural one. And structures can be changed, but only by those who understand them first. So stay curious, stay strategic, and stay disciplined. Because in a K-shaped world, your direction is a choice, not a fate. Follow Bull's Market, where we don't just talk about money. We decode the system behind it so you're not trapped under the K. You're the one drawing the next lineup.